Now on Sky News Business, your property empire.
Hello and welcome to Your Property Empire. I'm Chris Gray. What are your options if you have a home with some development potential but you have no experience in doing any building work? With lenders tightening their belts, especially to owner-developers, is it possible to find alternative sources of finance? And what are the risks in doing a joint venture deal with a developer who can do everything for you? Well, joining us tonight is Mike Cunningham from Cunningham Estate Investments and Charles Tarbey, Chairman and owner of Century 21 Australasia. Good to see you on the show, Mike. Thanks for joining us for the first time.
Thanks, Chris.
Maybe explain to the viewers a bit about your background and what you actually do as a business.
Sure. So we're a property-based business. Two core components. The first is retail leasing and consulting to shopping centres and shopping centre owners. And we also do residential property development, where we mainly focus on infill projects which are working in established neighbourhoods with existing infrastructure. We target 2,000 square metres blocks up to 1.5 hectares. That gives us a range of around about little subdivision and developments of lots of 4, all the way up to about 25.
And so basically, in layman's terms, if they don't understand some of the lingo, it's really you're getting someone with a house on a big plot of land where you can do lots of other things, and you're effectively working together to try and get a better outcome for them. Yeah,
that's right. I mean, you know, obviously the traditional way is to just buy the block outright, but there are other ways to achieve that outcome.
Now, there's obviously quite a few people doing bits and pieces around this kind of space. What is the biggest challenge that I guess these small developers are struggling with at the moment?
Yeah, look, I think without a doubt most developers are going to be struggling with finance. We have a good relationship with our traditional lenders and funders, but bank policy is almost changing on a weekly basis at the moment, so we've got to be a little bit flexible in how we approach our projects.
Now, Charles, you've got Century 21 Finance as well, and we've talked about this a lot over the last few months, but we've mainly been talking about kind of homeowners and investors. For the small little developer or owner-builder, things are pretty tough.
Yeah, they have been for a while. I mean, you know, as Mike was saying, you've got to have a very good working relationship with your bank. I remember a small project that I put together myself personally of 12 over 55 villas, all of which were sold prior to, and this is going back pre this last cycle that we had, and even with them all sold at substantial prices, if I didn't have the working relationship with my bank, I'd be in trouble. There's one particular bank that I bank with that actually won't even go near any construction development. So,
and this is where, in the old days, you've had 20 years history with the bank. You think your bank manager's going to look after you, but if the big cheeses at the top at head office say no, your best mate can't do anything.
Correct, and the responsible lending issues have kicked in, the way they're treating investors has kicked in, the way they're stopping overseas buyers to some degree buying. There's a whole series of things that have kicked in the last year that have made it extraordinarily difficult, even with equity, to get a development through.
Now, Mike, they say if there's a will, there's a way. So tell the viewers a bit about what you're doing to help people that maybe can't get the finance.
Yeah, sure. So, well, we use traditional banking relationships where we can, because they're established relationships that we currently foster. We've had to develop relationships with non-bank lenders, so that's just private organisations which are set up to offer commercial loans to people and organisations like us. We have always worked with high net wealth individuals to become money partners or investors in our projects, and we've also had to be a little bit creative and work out ways to work alongside landowners through instruments such as a joint venture arrangement.
And so, again, I guess in layman's terms, you're effectively saying to this owner to say, well, you've got a big plot of land, why don't you put that up? You look after all the development side, and between the two of you, 2 + 2 hopefully equals 5.
Yeah, pretty much. There's a number of factors involved in that. We need to basically make sure there's an alignment and a fit for the outcomes that we're both seeking. We spend time helping the landowner understand that this doesn't happen overnight. So time is a factor. We need at least 18 months to get a project finished, sometimes longer. We help them understand what the incremental profit over and above the land value they can achieve by sharing in part of the development profits, which is over and above the money they will make from the sale of their land. And then there's also the comfort level. Everyone has their own separate or individual comfort level as to where their risk profile sits, and we need to make sure we accommodate that as well.
Sure. Now, Charles, I guess a typical agent's not going to be able to deal with these kind of conversations necessarily, are they? It's probably going to be trying to find more of a real estate agent that's going to have a slightly broader idea on things you can do.
I think it's very dangerous for a real estate practitioner to be involved directly in that process, because it can get complicated. You know, not all deals go through smoothly, not all councils operate in a manner that you might expect them to. There's also the issue of the development not meeting its time frame, and then of course if the market changes there are issues there. So you've got to have all sorts of guarantees in place, and organisations that specialise in that would be where you would go to do that.
Sure. Well, we'll talk a bit more about that later on, but let's jump into the numbers to see where the market is at the moment. What's happening with our clearance rates?
Yeah, it's steady now, so we're starting to see that steady movement back to a marketplace that we like to see. So the clearance rates across the nation came in at 64.2%, slightly up over last week. At this time last year they were 68.3%, so there's not a lot of difference now, whereas over the previous weeks we've had a massive difference between last year and this year, so the gap is closing. Sydney came in at 60.8%, slightly up over last week with 690 auctions, but Melbourne came in at 67.3% with 1,628 auctions, so see, they're still really moving down there in Melbourne. But again, it seems to have stabilised. The best performing capital city this week at 70.1% was actually Adelaide.
And that's pretty much going to be it, because we're not going to be on the show on Christmas Day, are we?
No, I don't think we're going to see too many auctions at Christmas Day, no. So I think it's going to stop now for quite a few weeks. We won't see any of the results come out, because there'll probably be some auctions floating around here or there, but nothing that we can hang our hats on. And
I assume the homes advertised for sale is pretty much down to...
Yeah, they've been declining too. They've been declining significantly over the last 4 or 5 weeks. So they're down 3.91% this week over last week. Last week was in the 2s, the week before was in the 1s. So, yeah, it's expected, but it's important to note, people should note that there's substantially more stock on the market today than there was this time last year. So there is a change. It's been coming through fairly nicely and steadily in most parts of the country. So it's good to see that happen.
And then moving on to rent price movements.
Yeah, they declined this week. And interestingly enough, the capital city we spoke about, where a lot of people have moved into investing, in Hobart, it declined 1.29%, and it's had a few declines. So that's significant. It's just like some of the Sydney marketplaces where rents are going backwards, because lots of investors have been around, they're settling on their properties now, they're looking for tenants, so there's an abundance of properties kicking through. But the one that I keep note of most is Perth, and they had an increase in their rents this week over last week, 0.96%. So that's an interesting one, because that's been a very good changing marketplace.
Yeah, I think everyone seems to be talking about Hobart. I had one of the newspapers give me a contact and say, oh, we're doing this big stories, can you put your oar in? I said, oh no, you need to speak to someone like Charles that understands. I've only been there once. Okay, moving on to vacancy rates.
Yeah, very strong again. Melbourne overtook Sydney again at a 0.85%. Sydney climbed to 1.1%, and it's been under 1 for a while, so that's an indication. As those vacancy rates start to climb, so too do the tenants have an opportunity to negotiate a better rent. Perth jumped again at 8.49%. I'd sort of really like to see that back under the 7s and closer to the 6s, but it was a 3.48% vacancy rate with those 3 capital cities. So there is a story in all of that, and going back to the auctions, and the interesting thing about the auctions as an example is Perth, Adelaide and Brisbane are the only 3 capital cities in the last 3 weeks that have done better than this time last year. So something's changing.
So we've been talking on the show over the last year, and there's certain markets that are flying straight away. I guess in the areas that you're kind of buying in, can people sell their properties straight away? I mean, I guess why would someone come to you rather than either do it themselves or just sell their property?
Well, I guess it depends on how you can best maximise the return on the block or on the property. And a common conversation that we have with landowners is they understand that they're sitting on a development opportunity. They don't quite understand what's required to turn that into a development, but they are interested to participate. and that's when sometimes we have the conversation around, well, one of the things we can do is work with you on this project and assist you and do all the hard work for you, and help you understand what's involved in doing a joint venture, where they can then participate in the development profit, as well as achieve the market value for their property as well.
Sure. And just very quickly, I assume that there's, in some of these areas, that's where people need to look at different ways of doing things.
They do. They've had the opportunity, we were talking about it earlier, some areas with some substantial blocks of land now, and when you look at some of the blocks of land that are being subdivided, you can probably get 4 or 5 properties on one in some cases nowadays, so
good to see.
Good opportunity.
Wonderful. Thanks for joining us this year and giving us all the updates, and we look forward to them next year as well,
Merry
Charles.
Christmas to you and your family, Chris.
Now, we're going to take a short break. We'll be back soon with more on developing.